Big Short, aka Michael Burry, has just dropped some terrifying news for the future of Tesla stock. If you hold any Tesla stock or are planning on buying some in the near future, you're going to want to watch this full video. Hello everyone, you're watching Trade Daily. Like and subscribe to get all the latest news on Tesla and Tesla stocks. Now let's get into the news dump. We'll start this off by looking at Tesla's stock price. Today's share of Tesla stock is trading at $196 per share, down 5% at the time of recording. Tesla stock has plunged nearly 70% from its peak. Big Short investor Michael Burry called the crash Tesla stock has plunged about 67% from its peak in November 2021. Michael Burry of the Big Short fame warned it could plummet 80% or 90% at the time. The investor repeatedly warned Tesla shares were in a bubble and destined to crash. Michael Burry, the prescient investor of the Big Short fame, must be feeling vindicated about his downbeat Tesla call. The stock price of Elon Musk's automaker has nosedived 67% from its peak in November 2021, slashing its market capitalization from above $1.2 trillion to below $440 billion as of Tuesday's close. Burry declared Tesla shares were in a bubble more than 2 years ago and has repeatedly warned they would suffer a devastating crash. The Scion asset management chief first revealed he was betting against the electric vehicle company in December 2020, describing its stock price as ridiculous. Tesla shares soared more than 700% in 2020 and surged in early 2021, a rise fueled by rock-bottom interest rates, zero-commission trading apps, and pandemic-era fiscal and monetary stimulus. Other factors were a boom in people playing the stock market while stuck at home and a social media frenzy around certain stocks. Well, my last Big Short got bigger and bigger and bigger too, Burry tweeted in January 2021, referring to his famous bet against the mid-2000s housing bubble. Enjoy it while it lasts. After bemoaning what he saw as reckless speculation during the GameStop saga, Burry said in February 2021 that a 90% plunge in Tesla's stock price wouldn't send shockwaves through the stock market. Instead, it would trigger the end of an era for a certain type of investing, he suggested. In a follow-up tweet, he compared the hype around Tesla to the excitement during the dot-com and housing bubbles. The frenzy around Musk's company was remarkably similar to 1999 and 2006, he said. In further tweets, Burry explained why he believed Tesla was hugely overvalued compared with its rivals. He pointed to its meager sales and slim profits and described its battery technology as inferior. Burry put his money where his mouth is by purchasing bearish put options against Tesla stock in the first quarter of 2021 and ramping up his bet in the second quarter. However, he exited the position during the next 3 months. Still, the money manager doubled down on his criticism of Tesla in November 2021 when the stock hit a record high. Can Tesla fall 80–90%? He tweeted. After 2000, many high flyers did. Amazon fell 95% 2 decades ago, changed its whole biz, and thrived much later. The Scion chief also pointed to Musk's stock sales at the time as evidence that the Tesla CEO knew his company was overvalued. Burry is a broken clock, Musk fired back. The investor took aim at Tesla again in April this year after Netflix stock plunged on the back of fears that its subscriber growth was slowing down. The competition came for Netflix, just like the competition is coming for Tesla, Burry tweeted. He returned to his punching bag in September when Tesla stock was trading at more than double its current level. If I am tweeting this, you can bet I am not short it, he tweeted. But I should be. Tesla has shed 2/3 of its market value for several reasons, including fears that Musk's Twitter takeover has become a costly distraction. Other drivers are a wider exodus from growth stocks in the face of inflation and soaring interest rates, and concerns about demand waning if a recession takes hold. It's worth noting that Tesla stock more than doubled between December 2020 when Burry announced he was short and its peak in November 2021. However, it's now given up all of those gains and more, meaning his call is looking prophetic, at least for now. Tesla shares have been on a roll, but some analysts think it's time for a pause. Tesla stock has been on a tear so far in 2023, and the shares were up another 9% this week at one point, but an end to a multiple-day streak of gains has tempered the rise for the week. As of midday Friday, Tesla shares were still holding a gain of about 2.5% above last Friday's close, according to data provided by S&P Global Market Intelligence. The recent rise came as investors realized recent price cuts were more of a strategy to hold market share than a sign of desperation and demand destruction. Tesla began raising the price of its Model Y this week, signaling demand remains strong. CEO Elon Musk also announced that the company's Investor Day will be held on March 1, where the company will reveal Tesla's Master Plan 3. Tesla followers are hoping to hear more from the company on the start of production of its Cybertruck, as well as any guidance on when another electric car model could be unveiled. But some analysts felt like the surge in the stock has played out for now, resulting in Tesla shares ending the week on a down note. Morgan Stanley analyst Adam Jonas still likes Tesla stock, but thinks the window of opportunity to buy shares at a compelling valuation has closed, since he values the shares at about $220. Jonas thinks the next catalyst will have to come from the Investor Day presentation. BTIG analyst Jonathan Krinsky similarly thinks the recent string of up days has run its course and that investors should wait for further catalysts from here. The Fly shared that Krinsky thinks a share price range of $210 to $225 represents resistance. Investors are concerned that Tesla is about to lose control of a key strategic asset. Shares of Tesla were down 5.8% as of 2:05 p.m. ET on Friday. The stock was underperforming the Nasdaq Composite, down less than 1% at the time of this writing, following an exclusive report by Reuters that revealed the Department of Transportation was set to finalize a requirement to force Tesla to open up its supercharger network to non-Tesla vehicles. If Tesla doesn't agree, the electric vehicle maker may lose out on $7.5 billion worth of subsidies for opening up its charging network. The extra subsidies would seem like a bonus, but some investors are probably concerned about Tesla potentially being forced to sacrifice a key competitive advantage, which is the exclusive availability of its industrial-grade superchargers for Tesla owners. It's a difficult problem that creates another element of uncertainty for Wall Street to think about, which explains why the stock is down. Tesla will have to weigh the benefits of the extra revenue from opening up its charging network against the new customers who may choose Tesla over competing electric vehicle manufacturers for its vast, high-quality charging stations. Tesla may eventually give in to the government's desire to expand electric vehicle access to as many people as possible. Tesla has already been offering access to its superchargers to non-Tesla customers since November 2021 in certain locations. The company may have more to gain than lose. It could compensate for the loss of the exclusive nature of its superchargers by raising fees or costs for other services down the road. Moreover, the experience of using its stations with the Tesla brand displayed everywhere may win over converts from non-Tesla customers. Overall, this could be an opportunity considering many of Tesla's stations are already located in populated areas and routes. And with that, ladies and gentlemen, we've come to the end of the news. Like and subscribe to stay up to date with all the Tesla news. But just before we go, I'd like to remind you that this video is for news and entertainment only and should not be used as investment advice.